Always, David, thank you very much for your time. Let's start with the overall performance of the local bourse. I did mention that it was about 0.8% up to end off the day. What I thought was interesting was that the financials did rather well, despite the rand still losing some ground against the major global currencies.
Yeah, it's peculiar to look at our market. I would have thought that with global markets under a bit of pressure today, the US is starting to fall again, with dire warnings from Goldman Sachs and from Morgan Stanley, and Europe also gave up ground. So it's surprising to see our market as firm as it is, but one can't tell, what was behind it. To be fair, volumes are very low, and maybe we're still catching up on Friday, but still, it's good to see a lot more green shares than red shares.
No, absolutely. Let's move on to some company news now. Let's start with Baldwin Properties. They're passing the 3 billion rand mark in revenue, and that's because they were able to sell more at higher prices. David, what did you make of this?
It's not a company I cover that closely, but I'm all over the Joburg. You've got Baldwin Properties. Even on my morning run, I passed their new head office. But I'm surprised that they're only a 1.4 billion rand market cap. But what's interesting looking at this result, Rofhiwa, is that they're on a dividend yield now of close to 8%. And without getting too technical, they're trading at no more than a 3.5 PE. Now, in a multiple, that means that 3 times the profits that they're earning. So that's very, very low valuation. So I'm not quite sure what's keeping the market back or what's disturbing the market, because on the face of it, the results look pretty good.
They do, and I just want to ask you before we move on, David, a general question around the health of consumers. Is this indicative of anything, or was it just a lower interest rate interest rates that people took advantage of in the period?
You mean in buying properties?
Yeah.
I think they're well placed. Their properties are not astronomical. I don't know what one of the apartments cost or what property, but I would imagine in the region of about 1 to 2 million. And that's where the sweet spot is in the residential market. So they cater for younger people or people or young professionals and that area of the market. So I think out of all the property companies, they seem to be pretty well placed, but I can't give you an understanding why the multiple and why the market is downgrading them. We probably need to look into the results in a lot more depth to get that answer. But on the face of it, look pretty good.
It does, absolutely. And then Barloworld, those shares in afternoon trade were up about 9% from their earnings expectations. I mean, some really solid performance that we're expecting to see come out of their results.
They were hit badly because they have exposure to Mongolia and Russia. And that's the mystery to me, because I'm surprised that, in their trading update, they didn't mention anything about Mongolia or Russia or their operations there, which are quite significant. They're meaningful. They are trying to either list or get rid of their Avis, which is the car hire side of it, and still makes up a big part of their profits. But I've been looking at the company, and I'm quite happy that they are performing as well as they did. But I think we need the results to come through, and again to dig deeper into how they're performing in Russia and what that's going to mean to them in the longer term.
David, we've run out of time, so I'm going to steal this last question and hopefully not get into trouble. Life Healthcare, what did you make of their trading statement? I mean, I thought things would be much better given the fact that the lockdowns have been lifted, more and more people are going about the normal ways of life. Your thoughts on what they shared with us today?
You have to look at last year. So the comparatives have distorted the results, because remember last year they have they have the operation in the UK alliance, which has done very, very well because of all the testing it did during COVID. And also they had sold an operation there, which kind of lifted the past results. So the comparatives distort their operations, but they are doing better than the results suggest, although the market did mark them down quite dramatically. So I think just understand there's some technical issues around around the comparatives, which related to some good results that they showed during the pandemic. It's going to happen to a number of businesses that benefited from testing and other issues during the pandemic.
Brilliant. Thank you so much for your time this evening. That's David Shapiro from Sasfin giving us a wrap of the markets.